Hello traders, the title of the video is how to use the Elliott wave strategies to conquer S&P 500 stock index or the financial markets like a conqueror. Do you feel like a conqueror, my friend? Do you want to conquer the S&P 500 or the financial market using the Elliott wave principle? Are you willing to use the magic of the Elliott wave theory to conquer the financial market? If yes, all right, let's begin, the demonstration, all right? At the beginning of this year, I think so, all right, I was recording, or at the end of last year or so, I recorded a video about the S&P 500, and I was telling traders that the S&P 500 is in a fifth Elliott wave, and it is confined in a triangle. But if you remember clearly, I was performing my Elliott wave analysis on the monthly charts. All right, on the monthly charts, all right, the S&P 500 is in the fifth Elliott wave, like the Dow Jones and the NASDAQ 100. Most of those stock indices on the monthly charts, okay, they are in the fifth Elliott wave. And because for the S&P 500 is confined in a triangle, it means that anything is possible, and one needs to proceed with caution, all right? That anything is possible. The price can go up or down, all right? But today, we're going to go a little bit deeper. So from the monthly chart, we're going to combine the lower degree Elliott wave analysis with the higher degree Elliott wave analysis. Before, when I was performing my Elliott wave analysis, we did not compare both degrees to see the bigger picture. All right. So the good news, so recently the market has been going up for some time, and people are saying that the market has stopped. The market is going to come down, all right, because it has been going up almost vertically, and it's just going up, and people wondering, all right, when is the correction is due, all right? The good news is that on a yearly chart, contrary to the monthly chart, the S&P 500 is in a third Elliott wave. The higher degree wave count will command the lower degree wave count. Though on the fifth wave we see the fifth Elliott wave. Do not get confused that the fifth wave on the monthly charts is the fifth minor wave, all right, of the third wave of a higher degree. Are you confused already? So on a yearly chart, this is the first wave from here to here. So traders say label it. Oh, in fact, I would like to say to a trader, a YouTuber called Sioni, that was telling me, in fact, I'm lazy to label it, that's all. Okay. I just don't like, you see, it's taking me longer to put a note. Don't laugh, my friend, don't laugh. Here it is. This is the note, all right? This one. So you put it here. And then you tap the note, all right? So I would say 1, all right? Is it big enough? Can we make this bigger? It's looking bigger, all right, it's good. So you see it's taking me longer instead of drawing a line and just go, all right? That's it. And I will, you see, red, okay. All right, so you see, that's the first wave. Can you see the level now? You see, now that I move, you see where is my 1. That's what I don't like. I would prefer it here. So if you adjust it, you have to move the 1. But if I draw the line, you see here. So I'm going to stick to my line for now. I'll practice with the labeling, and then we'll come. So this is the first wave from here to here, okay? Our second wave is a kind of a zigzag or a consolidation on the yearly charts. All right, that's it. That's the second wave right there. Can you see it? So second wave, 1, 2, 3 on the yearly chart. We are now in the third Elliott wave. So be careful. Anytime you see like this, we say third wave. What do we need to do before we can say that we are now in the third wave? All right, to avoid a flat correction trading mistake, you remember that video. We'll apply Fibonacci extension to that supposed to be first wave, and we highlight the 138.2% Fibonacci extension level. That's the pink line here, 1992. Because now you can see it found a support here. All right, in 2015, it breaks above and retests it. That 138.2% Fibonacci extension level of that supposed to be first wave. Now we can declare, you see, one step at a time. Otherwise, we will be talking about flat correction. That's the reason why traders were trying to sell here. Those are flat correction traders. Now, it breaks above it. Beginning of the year, we were a little bit careful because like this, if this candlestick bar here was not bullish, we'll be talking about flat correction if it start coming down like this. So now it's now clear. This is what we are talking. We are following the price one step at a time. Now things are becoming very clear now. We can now ascertain that the market is in the third area wave. So we are now in the third area wave, and that third area wave is not yet finished. How do we know? Because the fourth wave has not started yet. That's the reason why we know. So I'll label it again, 3. I'm getting used to it. Thank you, Cioni. I think this person is an Italian. It's a Cioni. Cioni. All right. Cioni. All right. If I pronounce it wrong, okay, just laugh. Okay. So here we are. So here we are, say. So we are now in the third area wave. That's the reason why people are wondering why the S&P just keep going up, why the market just keep going up, keep going up, keep going up. It's because of the higher degree. Now you may wonder why on Twitter, on Facebook, or on the net, people start calling for the market to come down. Do you know the reason? Using the area wave strategy is because traders on the monthly chart have identified the fifth wave, as I told you at the beginning of the year or at the end of last year. We are in the fifth wave on the monthly chart. Was it here? If I remember my wave count, 1, 2, 3, 4, 5. And we are in a triangle, market in confine in a triangle, also in a fifth wave on the monthly chart. People are expecting a correction. They are not wrong because, all right, they're expecting a correction on the monthly chart. But that correction that they are expecting on the monthly chart, that call for the S&P 500 to pull back, is just the call for that fourth wave of a higher degree. Though on the monthly chart, we are in the fifth wave. This is the lower degree wave count. On the higher degree wave count, we are in the third area wave, because now it becomes clear to us that is the third wave, because we have exceeded that 138.2% Fibonacci extension level, and this year 2017 is telling us that okay, we are now in the third area wave. This is what we are talking about. You see, sometimes it cannot be clear, all right? So that's why I say to you, in all cases, do not violate the market pattern. Just flow with the price. Is it in a rising channel? Flow with it. Is it in a declining channel? Flow with it. Is it forming high lows, high high? Flow with it. People are saying the market is going to go down. The market will only come down when we start seeing lower lows, lower high, or at least if it breaks that common sense trend line. You see the blue line that I draw here? That common sense trend line is not kaput yet. So it's looking more bullish than bearish. All right? So for an area wave trader at this junction, you understand now, monthly chart, we're on the fifth area wave. The pullback, the correction on the monthly chart will form the corrective wave on the monthly chart. So talking about the area wave cycle on the monthly chart, let's go back again so we may understand what I'm talking about here. So we have an area wave cycle following our guideline. I did not start counting here. I think I started from here. Oh, no, not that. I started from here. If my recollection is correct, from here, that 1, 2, 3, 4, 5. Allow me to put a vertical line there on the monthly chart. Okay, here it is. That call for the pullback, if it's happening on the monthly chart, those who do not see the yearly chart will. Okay, I want to apply Fibonacci retracement. Okay, let's see. Okay, I can see I have too many lines, but I know where I am, so I'll hold up, please, traders. Okay. They would expect that correction to pull back to the 50% Fibonacci retracement. Turquoise, can you see turquoise on my chart? That's the line there. So those traders that are calling for the correction on the monthly chart will expect that correction to come down all the way to the zone of 50%, between the 50% and 61.8% Fibonacci retracement of that trending phase from here all the way up here. So on the monthly chart, they come 1, 2, 3, 4, 5. So they will highlight the 50%, the 61.8% Fibonacci retracement of that trending phase on the monthly chart. And as the price is pulling back, they are watching okay, that zone. All right. But if we stop on the monthly chart alone, we will miss okay, part of the information. Therefore, as we go to the yearly chart, we see now it's now clear to us that we are now in a third area wave, and that correction on the monthly chart will only form the fourth wave of the higher degree on the yearly chart. All right. One more thing, my friend, as this is very, very important. That's why I say it all the time. Is that whenever we say third wave, first wave, or fifth wave, those waves can be extended. Though on a monthly chart we say we're on a fifth wave, so let me say correction is now due. That fifth wave can be extended. That fifth wave, in fact, is being extended now. It's being extended. 1, 2, 3, 4. It's going up. It's going up. It's being extended. All right, it's being extended. All right, the fifth wave can be extended. The third wave can be extended. So anytime we label something fifth, third, or first, we need to understand that that wave that we are calling first, third, or fifth can be extended. This is why we say one step at a time. My apology to traders. I would like to recommend a very important video to traders that are watching this one. All right, at the 24 Stock Trader YouTube channel, Digit 2, Digit 4 Stock Trader YouTube channel. The title of the video is Eagle Eyes, a chart analysis, S&P 500 stock index trader reveals more technical trading secret. It's a very long title. I'll say it one more time if you allow me. Eagle Eyes, a chart analysis, S&P 500 stock index trader reveals more technical trading secret. Check it out on YouTube, and you'll see a video from a 24 Stock Trader YouTube channel. In that tutorial, we were talking about the S&P 500 using the normal advanced technical analysis, and we were saying to traders that the S&P 500 asking the 3 specific questions: where are we now? Where are we going? What has happened before? And what are we looking for? All right, what are we looking for is the last question, but it's headed to 2861. As an earlier way trader, note it down or go and watch that video. All right, very, very important, because I discuss a deeper technical analysis about the S&P 500 there. Check it out and combine the normal advanced technical analysis with your area wave analysis, so you may know exactly what's going on at this junction. Though on the monthly chart we are in a fifth wave, that fifth wave can be extended, and if it is extended, the level that the professional are watching is 2861. There is a midpoint target, all right, which you should know. Anytime you set a target, there is a midpoint target. If you don't understand what we are talking about now, it means that it's time to subscribe to 24 Stock Trader YouTube channel. So apart from the ultimate bullish target at 2861, there is a midpoint target at 2506. That's where we are now. All right, we are now at 2506, that zone. So for us, an area wave trader on the monthly chart, we say we are on the fifth wave. We are expecting a correction on the monthly chart. That correction on the monthly chart will form the fourth wave of a higher degree on the yearly chart. This is a midpoint target. If the market decided to sell at a midpoint target instead of allowing the price to go all the way to the ultimate target level, all right, understand, all right, then we may see a kind of correction from the midpoint target. But what I was saying to traders at 24 Stock Trader is that The S&P 500 is looking more bullish than bearish. If one is trying to sell it at this junction, one must have a valid reason to do so, and one must sell gently because the market is bullish. On the yearly chart, the S&P 500 has been breaking resistances, and also it exceeded, okay, the 138.2% Fibonacci extension level of the prior trend on the yearly chart, and also the 138.2% Fibonacci extension applied to the profit target. So if you don't know what we are talking about, again, watch that video. We were using this measuring stick, we project it up, and we apply Fibonacci extension to the measuring stick, and we highlight the 138.2% Fibonacci extension level of that measuring stick. So for Elliott wave traders, that level is at 2437 at this junction. Prior to bullish signal above 2437 and prior to bullish signal above it. But understand that the midpoint target is at 2505. The prime may consolidate between 2506 and 2437. Watch that video to understand it more. Let's go back to Elliott wave theory. So what's happening now? Okay, I'm going to go back again to the yearly chart. We're going to do a bit of Elliott wave forecast. All right. So we are now in the third Elliott wave on a higher degree. We can apply the pitchfork tool to the first wave. So we apply it to the low of the first wave, the high of the first wave. Because I'm on the yearly chart, I always ignore the shadow on top of the candlestick bar. All right. See, I ignore it and I place it at the closing price. We apply Fibonacci. Okay. We apply, sorry, my apologies traders, ignore what I've just said. We apply pitchfork tool correction. Now we are talking about pitchfork tool. We apply it to the low of the first wave, the high of the first wave, and the low of the second wave. That's how we draw the pitchfork tool to determine the end of the fourth wave. If you want to use the pitchfork tool to forecast, okay, the market, okay, especially the fourth Elliott wave, all right, here it is. The low of the first wave, the high of the first wave, and the low of the second wave. That's the pitchfork tool on the chart. So if a correction is underway on the monthly chart, or if the fourth wave is underway on the yearly chart, it's likely first there are few scenarios that can happen. First target may be on the edge of that pitchfork tool on the yearly chart. Do you have a yearly chart? If not, find a charting software that allows you to see the yearly chart. All right? Or in that case, so here it is. So that's the first target for the fourth wave. If we are not saying that it will start today, we are not saying that it's going to start soon. That fifth wave on the monthly chart can be extended up to 2861. But may continue to go up before we see that fourth wave. But when that fourth wave finally starts, okay, the end of that fourth wave of a higher degree, or the end of that correction on the monthly chart, contrary to the expectation of those traders that were thinking that you come all the way to the 50% of that previous trend at 1751. That's the 50% Fibonacci retracement level of those 5 wave of that multi-wave on the monthly chart. It's at 1751. Contrary to those traders that are expecting the S&P 500 to pull back all the way to 1751, we do not accept that. I do not accept that personally. The first target that personally I would set for that fourth wave when it starts is the edge of that pitchfork tool. That's one scenario. Or it may stop at the median line of that pitchfork tool. So it may end here, or here, or here. If they push it too far, which I doubt it, which means if they break it here, if they bring it all the way here, that will be a violation of the Elliott wave principle. So we can't say we come all the way here. But sometimes you will see if the market becomes very bearish, it can pierce through and quickly close back up, forming a long tail into this. I doubt it. I doubt it. Unless something dramatic is happening in the world, all right? Unless something dramatic is happening in the world. So In a normal market environment, all right, first target for the fourth wave, when that fourth wave is underway, will be the edge of that pitchfork tool. If they push it more, the median line, reasonable median line of the pitchfork tool will be a better place for that fourth wave to end. All right. If it couldn't find a support, if that fourth wave couldn't find a support at the median line of that, at the median line of the upper half, so this is the median line of the pitchfork tool, this is the median line of the pitchfork tool. The one I'm talking about first is the median line of the upper half of the pitchfork tool. So we divide the upper half of the pitchfork tool into two. So first target on the edge, second target at the median line of the upper half of the pitchfork tool, and the third target, the median line itself of the pitchfork tool. Those are the levels that we must watch if you are trading the S&P 500. All right. So when that fourth wave is completed, all right, probably near the median line of the upper half, then we will have the fifth wave of a higher degree. Right? Then we will have the fifth wave of a higher degree. At this point in time, I'm choosing my word carefully with the information that we have because this yearly candlestick bar is not closed yet. Why do I need to mention this? Because if, for instance, this bullish candlestick bar end up being a bearish candlestick bar here, if they shoot it down with a long shadow on top and it closed bearishly, that will disqualify our third area wave. Have I made sense to you now? Okay. Some trader already got it. Allow me to speak to a trader who did not. You see, because of the way the price is going up now, we can confirm that we are now in the third area wave. But because this candlestick bar is not yet closed, we are now in August 2017. If at the end of 2017 it ends up being a bearish candlestick bar that closed below the opening price, we will discount that third area wave and we will come back talking about a flat correction for the S&P 500, meaning that we will say first trending first, okay, price came down, went up, and now we have an expanded flat correction developing here. But as things stand today, with the information that we have, we can talk about a third area wave, that the S&P 500 is in the third area wave on the yearly chart, but it's in the fifth wave on the monthly chart. It's also confined in a triangle, and when that third area wave of a higher degree is completed, all right, or that fifth wave on the monthly chart is completed, we are likely to see a correction on the monthly chart. That correction on the monthly chart will be forming, okay, the fourth wave of a higher degree on the yearly chart. That fourth wave of the higher degree on the yearly chart has a high chance either to stop on the edge of that pitchfork tool or near the median line of the upper half of the pitchfork tool. And if they are quite bearish, they may push it all the way to the median line of the pitchfork tool itself. As always, when we forecast the market, it's just an expectation. The price may print something completely different. We put our expectation aside and we just keep our eyes on the price, following the price without violating the market pattern. So as an investor at this junction, if you have been in the market, been bullish, buying from left to right, okay, every day, and maybe you were gambling, you come in every day, you buy, and it went up, everything's working beautifully, know that the third wave has been in place since 2009 and is coming to a target zone of 2861, but currently we are at a midpoint target at a 2506. At a midpoint target, some people may take profit, so don't be surprised if you start seeing a bit of pullback at the midpoint target at 2506. All right, so prior to bullish signal above 2437 and prior to bearish signal below it, the price may consolidate between the 2506 and the 2437. All right, we are in a triangle. It breaks above the median line of that triangle on the monthly chart I show you here. Okay, that's the median line. Okay. It's now approaching the upper side of the triangle, as I told trader in that video that I recommend to you that you watch. All right, so anything is possible. You continue to go up more, heading to the ultimate target at 2861, or it may pull back, okay, start forming, okay, all right, the fourth wave of a higher degree, or we may see a consolidation before it breaks through it Okay, so it may slow down between 2506 and 2437 for a while before breaking above or below it. Right now, it's looking more bullish than bearish. And if one is selling, one should sell gently and have a valid reason to do so. All right, so as an investor, you make your money. You have been playing around, being bullish. You are happy to be a bullish trader. But understand that the market at this junction require a bit of caution. Become very, very conservative. Or I'm not saying that go and sell. All right, be very, very conservative. Secure your gain. If you are buying at this junction, buy one step at a time. Start cashing out a bit. All right, take it gently because there is a target ahead. But we are also at a midpoint target. That's what I would say to investors. For investors that want to buy and hold, at this junction, it's more for technical traders, to day traders, to swing trade. You may get away with it, but if you are doing so, be reasonable. Be reasonable because the target is at 2861. All right? It's more, personally speaking, I would think it's more for technical traders, all right, to play it to the target level and to do the rest. But if you're an investor, want to buy a hold, wait for that fourth wave of a higher degree to be completed, clean and cut, all right? Become a more sophisticated investor, which means you are using your fundamental analysis with the advanced technical trading, Fibonacci, Elliott wave, to time the market correctly at the time when that fourth wave is completed. One more thing. If the market starts going down, people shouldn't go around and say, oh, it's a bearish market. But if that correction to form the fourth wave of a higher degree, maybe for 2 years, like this one here, 2 years or 3 years, something like that. Boom. People say, oh, market becoming bearish. What's going on? Why? The market has been going up for 9 years, my friend. Almost 9 years and 3 years correction. It's not bad, all right? Or 2 years correction is not bad. Now people will say, Joe, you're telling people to sell. Who are you to tell people to sell? I'm not telling people to sell. I am analyzing the charts using the Elliott wave principle. In a corner, okay, it's waiting the fourth wave. But right now, the bullish traders are controlling the market, and there is a target at 2861 at one point. In the next 2 years or so, that fourth wave at one point will come. Hopefully, it will be in another manner. If the market becomes very, very bearish, that fourth wave can be messy. So we are watching the edge, all right? The median of the upper half, or here, to form the fourth wave before the real fifth wave of a higher degree. The market will go up again in the next 10 years for sure. So a correction will come at one point. After that correction, there is one more move for the price to go up. But the reason why people are calling for the market to come down now is because of Elliott wave traders stuck on a monthly chart. That correction, you will see, they will say that it will come down to 1751. Personally, I doubt it, but we will see. We will see. No one knows what will happen. We will see. If volatility kick in or something is happening in the world, North Korea do something crazy, blah, blah, blah going on in the world, and so on and so on, well, can become a bit messy. And we don't want that. We don't want that. Okay? All right. So that's it really for the S&P 500. Have I covered everything? Have I said everything that I need to say? I think so. So 1, 2, 3, 4, 5 on a monthly chart. Correction is due on a monthly chart. That correction will form the fourth wave of a higher degree. On a yearly chart, we are on the third Elliott wave. That's why the market is going up forever. There is a target at 2861, midpoint target at 2506. One needs to be very cautious, though the market is bullish at this junction. It's confined in a triangle. It's in the fifth wave on the monthly chart, expecting the fourth wave. But if it breaks above the triangle and finds support, we see a bullish chart pattern, bullish trading setup, okay, bullish signal, okay, above 2437 or better above 2506. We will take it, all right? If it's going to go down, all right, you will know. Start forming lower lows, lower high. The common center line will be kaput. At least, you see, even on the monthly chart, the common center line is not yet kaput, all right? So even on the monthly chart, the common center line is not kaput, all right? This is the common center line on the monthly chart. Is not yet kaput. So before we can start talking about it, common center line monthly chart should be at least kaput. Common center line, okay, on the yearly chart, maybe kaput. All right, that's the time we'll start talking about it. So far, it's still looking bullish, but it's not going to go up forever. So take it one step at a time. Do not become too aggressive, a bullish trader. All right. So combine always the higher degree and the lower degree wave count, and use also the normal technical analysis as I show you now. If you watch that video, you will see it more. Instead of using the Elliott wave patterns alone, use the Elliott wave pattern, combine it with the normal advanced technical trading. Have any question or suggestion? Put it in the comment section. I always read the comment. This is true, and in due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that Joe, this is another blah 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 for 30 minutes, all right, let us know by giving us the thumbs down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. I would like to say to traders that I purposely allowed this video to be long, because anytime I'm talking about S&P 500 that is representing the market, I allow the video to be too long because I want to cover everything, talk about it, everything that you need to know. So, you have it, you can come back to it and watch that video and make decisions accordingly. All right. So to summarize this video, we are in the third wave on the yearly chart. That third wave coming almost to the end. Hopefully, if it reaches the 2861 level. After that third wave, we'll expect the fourth wave of a higher degree before we see the fifth wave of a higher degree. On the monthly chart, we are in the fifth wave. That fifth wave can be extended, which means the price heading to the target level of 2861. Once that fifth wave is completed, those on the monthly chart will be seeing that correction is due. That correction will form the fourth wave of a higher degree. Key levels that one should not forget. The first one, 2437, critical resistance level. Prior to bullish signal above and prior to bearish signal below it. Midpoint target, 2506. Because the 2506 and 2437 are quite close, there may be a consolidation between those two key levels. Best place to be bullish is well above 2506. Look for bullish chart pattern, a good reason to buy or a good reason to sell below those key levels. Ultimate target, 2861. One more time, thank you to trader that. If you want me to do, you see, I will get used to it soon. Try to label everything. All right. On the yearly chart, that's what I was doing before. So first wave on the yearly chart, second wave, we are now in the third wave, expecting. Thank you, Sioni, for letting us know. I put it at the wrong place. I'll get used to it soon. Expecting, hold on please, the fourth wave, to end either here or here or here. All right, so I leave it here for now, and expecting the fifth wave either to start from here going now, or from here going now, or from here going up. So fifth wave going up. I won't put the fifth wave now. I'll leave it like this. All right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use Elliott wave strategies to conquer the S&P 500 stock index or the financial market like a conqueror. Do you feel like a conqueror? Have you conquered the S&P 500? All right. Thank you for watching, and speak to you soon.